All right, what is up, everybody? Divine Hood here, coming at you with a second daily update on Bitcoin in the crypto markets. Okay, guys, I made a video a few hours ago, and we were talking about how Bitcoin could see one wave lower to actually hit the 1.236 fib extinction target, mainly because we were chopping around underneath the one-to-one target and based off of a potential double 1-2 impulse to the downside, with this being our wave 1, this being our wave 2, 1, 2, this is a 3, 4, 5, 4, 5. So now we could have completed our double 1-2 impulse to the downside. We did hit that 1.236 target pretty much exactly perfect. You can see we are getting a nice bounce from that 1.236. We bounced at, on Coinbase, 76,555, and 76,600 was the target. So pretty much a perfect hit of that target. And if we go ahead and zoom in here, we can look at the 15-minute chart. We are trying to break market structure on the 15-minute chart bullishly. You can see our last highs on the 15-minute. We did break it with a small SFP, but really what we want to see now is a real break of market structure, and I would say even to break this to be a little bit more comfortable. And then we might see a bigger push to the upside. But you can see here, hit that 1.236 perfectly. Earlier today in the video, I did say that was a possibility just based off us chopping around below this one-to-one here. We might see another move down, but we had to hold this. So I can go into that. This was from a couple hours ago before we had that drop. Let's go ahead and play this video here real quick for you. As far as Elliott theory goes, the only problem is when we break this one-to-one here and kind of chop below it for a bit, that was circled horribly, but when we break this one-to-one fib target here and chop below it for a bit, usually you do end up coming down to actually hit the 1.236. Not always, sometimes. Sometimes if there's other support confluence in this area, you can end in that area between the two. But that's why during Jason's stream today, I was talking about that 76.6 level being a really good level to watch for the end of it. Because if this is the ABC, it has to end here. If we go past this, then we have the a very highly increased probability that we're going to. All right, guys, so we have hit that 1.236. I also talked about earlier in the video that we could have counted that as a finished 5-wave structure or a double 1-2 structure, and we were looking at both possibilities. We did come down one more time. We did finally hit our target down here, pretty much perfect, and we are seeing a decent bounce. Now, we're not out of the woods yet. We need to break market structure bullishly. And I would say even to be really, really comfortable, yes, we're trying to break it right now. This is a small MS break if we can break this area that we're pretty much at as we speak. But to get really comfortable, we're going to want to break that fourth wave high of that impulse down. This is the 84K area is what we want to break. You can also see our anchored VWAP from the 49K lows are right up in this area here. So that could act as a resistance. And if we reject from there, we probably are going to come down more. It is possible with it being nighttime. I know there's markets that are open around the world, but we could start ranging in this area for a bit, start to form a bottom range in this area. But really, we want to see this 76.6K support hold, and we want to make another bigger push up. If we start to lose 76.6, we do have that support at the bottom of the bearish pitchfork at 75K. But even if we come down here at 75K and bounce, we're probably just going to see a lower high before continuing to dump. Or we could bounce and see another bigger ABC, maybe come up to 84 and then continue the dump. Really, 76.6 is a very key level to hold the support if we want to see our ABC correction finish and hold and see a bigger impulse to the upside. So we're at the beginning stages of that. It's still early in the game on this bounce here, but we are seeing the perfect bounce that we were looking for earlier today in the video. We are trying to break market structure. Look at where we're at right now, though. We're consolidating pretty much at the lower band of the bearish pitchfork here. And we are trying to break this band to the upside right now. We are having some trouble and some difficulties doing that. We really need to get above, first and foremost, this guy here and above these guys here. Change market structure. So if we can get back up above these guys here and make a higher low, we can really start to rock and roll to the upside. All right, now I want to talk about that for a second real quick, because you can see our wave 4 highs are right at the bearish pitchfork midline of the bearish pitchfork on Bitcoin. And so if we come up here and we just barely wick this into our pitchfork midline and then just dump right back down, to me, that's going to be a bearish sign. That's going to mean we tried on higher time frames to break market structure and we are failing. Because you can see when we go on to the 2-hour chart, yes, I mean, there was a red candle in here, and technically that is a lower low, lower high, lower low here. And we are breaking that little red candle there, but this is the market structure that is going to be really important to break. So if Bitcoin can work its way, it's at the anchored VWAP level up here, and it's our prior highs, it's our pitchfork midline. So I'm going to say 84K right now is the level we need to be break to be comfortable saying maybe the dump is over for a bit and maybe we see a little bit of a recovery on Bitcoin. So the question is, okay, say we do that. Say we're able to finally break above this, maybe flip it to support and continue up. Where are we going to look for as our possible resistance areas? Well, we can look at we'll look at our local golden pocket pull, and that golden pocket pull would be from just the C wave, the highs of the C wave down to the lows of the C wave. And our golden pocket pull is going to be right up near the point of control of this range. So if we take this range here, let's just grab a volume profile and let's pull it on this sideways range. We'll go to that low there. You can see our point of control is at that golden pocket area. You can also see our value area low is very close to our first resistance level. So I would say our first resistance level is between 83.5 and 84K. Other than that, our next resistance would be up at 86.2, 86.1 to 86.2-ish, this general area here. And then if we can break that, we're starting to get back up into some really nice levels up here where we have the value area high of that small range near our value area low of our big range that we broke down of, that November 11th range that broke down a couple weeks ago. It's near the top of the bearish pitchfork as well. And that is actually going to be a very key back test. If we come back up there again, say over the next few days, we do something like this. We start an impulse to the upside. Maybe this is our wave 1. We reject from there, bounce from our local golden pocket pull. It would be from this low to this high. See a bounce from our golden pocket and shoot up in a wave 3. Maybe reject at the top of the pitchfork band, do a wave 4 and a wave 5 here. This area is going to be a very, very key area to see if we reject again. Because if we come up to the macro value area low and reject again, that is going to be very bad news for Bitcoin. That's going to be 3 tries of trying to get back in the old fair value of Bitcoin and 3 rejections. Now, if that's the case, Bitcoin, well, it's probably going to drop to 72 to 70K, to be honest with you. And it might take some time. It might, start to form a range, a bigger range. Maybe it does something like this. It drops in here, comes to like the local golden pocket pull from this low to this high up here, comes to our local golden pocket. And then we start to form a much bigger range within, let me clean this up for a second here. Maybe we start to form a much bigger range in this area here between 76K and 93K. So actually like this area here between the whole pitchfork, pretty much. We could form a range in this entire bearish pitchfork for maybe a week or 2 weeks. But even starting to range here would be better than the dumps that we're seeing, because we need to see some range forming and see some support coming in and holding in order to feel truly comfortable. But look at this on our bearish pitchfork. When we're zoomed out on the 2-hour chart, you can see that we did see some wicks below the band, but we did not break the band of support on the 2-hourly, just wicks below. If we go to our 4-hour chart, let's look at our 4-hour chart and see how that's doing. 4 hours, yeah, look at that. Very nice there. Finding support on the lower band. Maybe we can push up to 84K where we would see the back test of our midline. And it's also our key anchored VWAP that we're starting to lose. You can see here on this wave here, we had our 1 2 1 2. Our third wave came down to back test the pitchfork. We did touch the back test of the pitchfork, came up to our anchored VWAP and rejected last night. That was our wave 4. And then in here we saw 4 5 4 5. You have to zoom in on smaller time frames to see that. But yes, we are potentially finally ending our bigger ABC correction to the downside, and now maybe we can start to see a little bit of an impulse to the upside here. So let's just kind of see how this plays out. It's still early in the bounce. We do have bull divs on some time frames, which is a good signal to see. We have bull divs here on the 2-hour chart. You can see lower lows in the price action, higher lows in the momentum waves here. I know you guys can't really see that. There you go. Money flow is starting to bottom out here on the 2-hour. If we start to roll over, it's really not going to be good. And then as far as our, like let's go to our hourly chart. You can see those bull divs there. Money flow has looked like it's starting to bottom out. We're getting a little bit of a push up. Let's go to our 30-minute chart. Yeah, lots of bull divs. 4 drives of bull div here. Money flow starting to curve to the upside. It's looking pretty good here. Now, I did have a long from this general area here, not exactly at 76.6. I was a little bit busy, so I got in an itty bit late here, like 76.8-ish or something like that. But we were looking for this level as support. And as soon as you started to see a bounce from that level, you could have entered along, for instance, entered along around 76.8. Let's see here. Where's that at? 76.8. Like up here, you would look for your first TP. I mean, you honestly TP1 at this break of structure just in case you reject, but your stop loss is going to be right below that wick. You could give it a little bit of breathing room, maybe 100 or 200 bucks, but look at that's already a 6 to 1 risk reward ratio there. But if you really think it's going to blast, your first TP could be up here at 84K. I mean, look at this risk reward ratio because you got so close to the bottom here. You knew what to look for. You got so close to the bottom. You're going to make massive gains on your account, even with proper risk management. You can make 10, 15%, especially if you bring this up to 93K. You could make some really good gains up here. So that is why we look for levels and try to get in as close as we can to the levels, but you also can't blindly long those levels. You have to wait for confirmation. We were seeing confirmation. We got bull divs on multiple time frames coming into our key support that we knew was a key support. So you know the information ahead of time. You have the plan ahead of time. You have the confirmations to get in. You enter the trade and look at where we're at now. We're already up. Your stop loss should already be protected. If you already TP1, good. I actually have not TP1'd yet because at this break of structure here, just in case you roll over, you might want to TP1 there just in case you do roll over. And it looks like we're still finding some trouble trying to get above that. But that would be a TP1 maybe if you're bullish, 10 to 15%, enough to cover fees, and then also move your stop loss to break even to protect your position. Let the rest ride for bigger, higher targets. Okay, guys, that's it on Bitcoin. I covered a lot of it in the video earlier today. There's not too much left to cover on Bitcoin. We also covered Ethereum. Let's go into Ethereum real quick because you can see we are trying to hold that support box that we are in now. Now, I do think it's possible with this being kind of a bigger support, we could start to range for a bit in here. And then we'd really want to see that push up. We might also see a sort of a lower time frame head and shoulders, with this being your left shoulder, this being your head. Maybe we come down to the bottom of the box again for a right shoulder and then kind of work your way up. You see a head and shoulders, inverse head and shoulders, which is a bottom reversal pattern. And that could give us our push up. But look at also bull divs here. Let me get rid of this so you can see more clear. Dang it. Here we go. And you can see here lower lows on the price action, higher lows on the momentum waves here. And also more regional bull divs as well. Lower lows on the price action between these two lows, higher lows on the momentum waves, and money flow curving to the upside. So we got the confirmations we needed to enter these longs at these support levels. Long as you have proper risk management, and proper confirmation enter, you can enter. And even if we get stopped out, maybe this does roll over and we get stopped out, at least you entered with good risk management and you had confirmation to enter your trade. You're not going to win every trade, even with confirmation. The market, no one's ever 100%. If there's a trader that says they're 100%, then run the other way, because they're either lying to you, they're a scammer, or maybe they figured something out that the rest of the world hasn't. But it's all based off, trading is based off probabilities. No one wins 100% of their trades, unless they're, no, I'm not even going to go into that. So that's it on Ethereum. Now, if Ethereum pushes to the upside, we need Ethereum also to break market structure here. And I would say our real key market structure for Ethereum to break would be this high around 21. Let's see, what is that here? 2152. That area would be nice. Now, we do have a smaller market structure break in this area down here at 1903. But I think the key level really to break for Ethereum to kind of see a bigger relief rally is going to be that 2150 area. And then if we see that break, let's go ahead and zoom out here on Ethereum. Let's go on to the 4-hour chart. If we break that to the upside, of course, we can look for our anchored VWAP, this key anchored VWAP. Let me zoom out a little bit more here. And that anchored VWAP is from our 4,100 highs up there on Coinbase. So, and you can see that anchored VWAP is also, by the time we get up there, because it will take some time to get up there, we're not going to rocket, 20-30% in one day like this. It's going to take some time to get up there. Our channel, our ascending channel on the weekly that we broke down from is going to be in confluence with this anchored VWAP up around $2,800. And so if we can work our way up there over the next week or 2 weeks to $2,800, that's going to be the key back test. If we come up here and we reject from this, we're probably going to go to $1,500, $1,600. If we can reclaim that, it's going to look good. Or even a semi-bullish scenario is just start to get back within this range. So let's go ahead and look at this range here. Let me get rid of all this stuff. And we're going to do our fixed range volume profile. And we're just going to pull it from the last big impulse up sideways. I'm just going to include it until the time we broke down from that channel. Just this sideways price action when we broke down from the channel. You can see, yeah, our value area low of that range is also going to be at the very key back test of our channel, of our ascending channel here. And then let's actually go ahead and even look on the daily chart. What we could do here is pull our fib from the last big daily high to our current low. And let's turn on our 786 here, and let's see where our 786 is at. So our 786 is at 2,600. So I'd say from 2,600 to 2,800. Or what we could do is, now that we're seeing this, let's go ahead and turn our other channel back on. Not that guy. That's our log channel. Okay, this guy here. Okay, so let me turn off the log channel for a second. You can see we're at the bottom of our daily descending channel here. And you can see also the highs of that channel is right around the anchored VWAP. So a lot of key resistance right at 2,750 to 2,800. This area here really, really, really is going to be a big key resistance area on the chart. Let's go ahead and make that purple, and we can scroll that over just a bit here. That is going to be value area low. So value area low. Log channel back test, and then let's see, and then top of the descending channel. 786 is also close by there, and then we also have an anchor VWAP. $786 is a little bit lower than that, but we're going to put that there. What we also can look at is more confluence. We can do our fib pull from the highs of the channel to the lows of the channel, of this descending channel. Let's turn on our 382, which often acts as support resistance in a strong trend. Yeah, right in that area. Okay, so I'm going to say we're going to extend this box just a little bit here. We're going to extend this box from the 2650 area where the 382 is, And we're going to bring it down a little bit lower because by the time we get up there, it's really, this anchored VWAP is going to drop a little bit, and same with the channel on the daily. Like if it, it's going to take some time, a few days for us to get up there. Maybe we do something like this, reject for a bit, flip it, come up here. Even if we come up pretty quick, actually we would have to do it even faster than that, but you get the idea. We could see a push up here, maybe flip this, come up here, and that is going to be our key area. Anchored VWAP should be close into that area by then. We have the value area low of our prior range that we broke down from. 786 is in this area as well. So from 2650 to like 2750, 2760-ish. That's where I'm saying the next big key resistance is on Ethereum. Now, there is other resistance and take profit levels before that, of course. As far as scalping goes and more day trading goes, there's absolutely other resistances before that. Like we can zoom in onto the 2-hour chart. You could do a fib pull just from this high to the low. Let's go ahead and do that real quick. And let's look at our golden pocket. Yeah, golden pocket is going to be up in this area. We did, let's see, 2-hour chart. So we did form a small 2-hour range. You can see from these lows here all the way, I would pull it all the way until we broke down that last breakdown there. And our value area highs in that range. So another smaller resistance up ahead of us is going to be that like 2246 to like 2272 area. This guy here is going to be our value, golden pocket, value area high. And it might be our channel midline by the time we get there. Because this descending channel is so steep that as time passes, it's going to get lower and lower and lower and lower. So if it takes us a while to get up there, we do something like this, maybe come up here, hit into the, break back into the value area, back test that value area, come up, maybe see first rejection from the POC, then come up to the value area high and hit into that area. Nothing's going to go like this. Unless Donald Trump tweets about Ethereum being in a reserve or something. I'm just kidding. That was a joke. All right, so that's what we're looking at here. Now let's go ahead and go on to Solana. Solana. So we had this box laid out from yesterday's stream, which was the SFP of the 125.5 lows into our value area low of our much bigger daily range. And that daily range, or that range, is from what was that? This March of 2024. So like a 16-month range. No, a year-long range. I'm sorry, it's still March. Gosh, as a trader, you lose track of time sometimes. So let's see here. Yeah, from the March 2024 highs. So it's March of 2025. So a year-long range we've been trading in. And you can see that this was acting as support. Now, if I zoom back out on the daily, it looks like we just busted straight through it. Now, we did get the bounce first off up here, and that was support, and it gave us the big Trump push to the upside. So it did hold once as support. We were coming into it again, and the reason why I left it on the chart is because we didn't quite hit everything in there yet. We actually created some more liquidity below. So let's go to our hourly chart. We had the SFP of the lows. Let's see, these lows here at 125.5. Let's put the SFP on there. And you can see the first time we did grab that liquidity, we saw a bounce. And that would be good enough for a scalp for me. I mean, let's look at how big of a move up that was. Because that was overnight last night. That was pretty much equal to Bitcoin's Wave 4 push up. A 6% move. You should definitely be able to make money on a scalp on a 6% move. You can make money on a 1% move. So 6% move, that's a really good, of course, you'd be longing it after the reclaim of the SFP level. So at like 125.5, you'd be longing it. Your stop would go below that low that was there right here, that SFP. And then you probably want to long, take some profits at these prior highs that were right up here. And you can see we just SFP'd those highs and then dropped. So right there alone, that is a 3.2 risk reward ratio. That would be a good TP1, and then you would have got stopped out on the rest of it, but you at least had a winning trade from it. Not as much as you wanted to, but it would have been a winning trade. Now, after we SFP'd these local highs, that was our kind of three-wave zigzag correction up that we saw last night with Bitcoin and with all these coins. You know, this 1, 2, 3-wave push up, dump, corrective move up, and then the dump. So we dumped, we would have got stopped out on the rest of that. And now I'm going to go ahead and delete this box here because this box is no longer required. But look at where we fell to. Now, this is the reason why I'm still a little bit hesitant on Solana. We have not hit our 1-to-1 target. And remember, the ABC correction target is between the 1-to-1 and the 1.236. So if we zoom out onto the 4-hour chart here and we look at Solana here, we did have our wave 1 down here. First of all, this was equal to Bitcoin's 3-wave correction from the Trump tweet weekend. We had our big 5-wave impulse down here, a correction here, and now we're seeing our 5-wave smaller 1, 2, 3, 4, 5 here. But I don't like how we front ran our 1-to-1 target at $111. So there is a possibility we could come a little bit lower. Plus, you can see at $110 exactly, we have our key liquidity grab of these lows down here. Now, maybe the market makers are trying to keep this low intact so more macro structure doesn't change bearishly. But I don't like, and I also would have liked to come down to the 1.236 because it would finally hit our band of support down here, our pitchfork band of support. We did not do that yet. So, yes, we are seeing a bounce on Solana here, but could we reject from this value area low that was at 127? Let's actually take that, and we're going to pull that all the way because we're still in that range overall, that year-long range. I'm going to have to zoom out on this for a second. I know this looks messy, guys, but this year-long range, we're still pretty much at the bottom of that range. We saw deviations within that range before, so we're below the value area low, but we're still in the bottom of the range, so we can pull that range profile all the way, and we have not back tested it since we fell in below it. This is the first time in like months that we've actually tested the value area low, and this is the first time that we're breaking below it and closing daily candles below it. So look at this. We front ran our target. Look at our money flow, by the way. Horrible looking. Very horrible looking. So what could happen for Solana? We could come up to 127, 126.5, reject, and roll over one more time to SFP into our bigger actual support level between the 1-to-1 and the 1.236. So I'm actually looking for that 103.2, 103.13 here on Binance to hold us. It is acceptable. So let me say this. It is acceptable to come down to SFP these lows into the beginning of the band around $106 and not hit the 1.236, but that's still in our target box. It's a zone. It's our two most common targets are these targets. So if you came down in between there and hit that pitchfork and then pushed up, you'd be grabbing the liquidity and you would be hitting our pitchfork band of support. And technically you'd be meeting your 1-to-1 ABC correction target. So I do think that's reasonable. I think we need to look between like 106 to 103.13. Let's zoom in here onto the 4-hour chart. Yeah, because no bull divs yet on the 4-hour. Let's go to our 2-hour chart. No bull divs even really on the 2-hour. Yeah, it's equal. And let's go on to the 1 hour. So Bitcoin actually looks more bullish than Solana right now. Solana is seeing some 1 hour bull dips with money flow rising here. The key for Solana, the very, very big key, all you need to watch to the upside right now is the bearish backtest of this value area low at 126.75. If we reject from this value area low, it almost guarantees us to come grab the liquidity at 110 into our pitchfork band at 106. And then we could see the move up from there. Or if we reject, we could come all the way down to like $100 to the bottom of the pitchfork band, right at $100 pretty much. So 126.75, that's the area that I'm watching. 126.7 to 126.75-ish area. That's where we're watching for local resistance on Solana. Now, if we can break above that, back test it and flip it to support, then maybe we're just going to front run this target, or maybe other exchanges actually came down to hit that target. let's check Coinbase. You know, I added these coins to my watch list a long time ago, years and years ago. So I do use Coinbase. Look at okay, we need to look at this. This is great. We're hitting our bearish pitchfork midline. You can see we rejected from the top of the pitchfork, came into the band, got support, came up to the top again, came to the band, got a small bounce, rejected. Now we're hitting our pitchfork midline, and that's great. That's a really big support level. Pitchfork midlines are really good support levels. Let's go ahead and take this volume profile. This is the same volume profile. We're just going to pull it all the way. Let's make sure it's the same. Yeah, it's the same volume profile here. Yep. And this is an inside pitchfork, by the way. I don't use these very commonly, but when we see structures like this, we can use an inside pitchfork. By the way, I know a lot of people have been asking me about pitchfork tutorials. Stay tuned. I have some very exciting updates and news for the channel coming soon. And I'm actually saving that pitchfork tutorial for when I make those announcements. And then I'm going to start making more tutorial videos. But I want to wait until this announcement is ready and made. So we're going to be on standby for that for a bit. All right. Anyways, same thing. Bouncing from the pitchfork midline. I should have stayed zoomed out for a bit so we can grab our ABC correction targets. So we're going to grab our trend-based Fibonacci extinction. We're going to go from the highs to the lows to the highs here. And okay, so it's 110.99 instead of 111.01 or whatever it was. So we still front ran it. Ooh, but look at where that 1.236 is. Look how nice it is aligning with the bottom of the pitchfork band. So I actually think it is probable, not guaranteed, but probable that we come up here, reject from our value area low, see one more pushback down. That would also allow us to grab our liquidity of our prior major low down here at the bottom of the pitchfork. Major low at 110, the SFP of that major low into that area. Man, how good would that be? Yes, so that's kind of what I'm looking at right now, but we are bouncing and we are, okay, wait, why did I do that? We are bouncing and we'll probably at least come up to 126.6 to backtest that area. I do believe also if we go ahead and do a Fibonacci pull just from the last 4-hour high to the last 4-hour low. Okay, our 786 is up there. Okay, cool. Some confluence. But really what we'd want to do is do our Fibonacci pull from the highs of wave B to the lows of wave C, the current lows of wave C. And we'd go to our 382. Yeah, okay, that's it right there. So if we reject from the 382 in the value area low, that's our first order of resistance. Now, this is a local resistance, and if this wave is done and it's just going to front run this major support area, we'll break this. We will break this to the upside. But for now, because we front ran that, I have to put this on the chart, and we have to keep in mind that we might reject from this area. And let me make this down to the actual level. Okay, so this is going to be 382. All right, that's that there. And then, of course, if we break that to the upside, I mean, there is some other levels we can look at. We can look at our golden pocket. Golden pocket is going to be at the top of the upper pitchfork band. I would absolutely say that's a level to watch for. Let's go onto our daily chart and let's look in daily levels. Okay, we don't have a daily up there. No dailies up until this area up here at 178-ish, 179. We're not going to put that on the chart yet because we have stuff ahead of time. But yeah, I would say the next big level, if we break back into the value area, if we don't reject at that 127 area, then we're probably going to come up to 137. 137.2 and hit into this area. Now we would have to do that. We'd have to see a couple really big daily candles. Like this candle would probably have to come all the way up here. The next daily candle would have to come like up here, and then the third one up there to make the confluence as far as time wise goes with the pitchfork band. But the 786, so let's zoom back out to the 4-hour chart, zoom back into the 4-hour chart, and I'm going to go ahead and look at our 786 as well. So I'm going to leave the golden pocket on. I'm just going to add the 786. You can see it's near our point of control. So I would say these are our local levels of resistance. This guy here, right down into this area. I'm going to bring it a little bit lower just to match it to the pitchfork band. So this is GP pitchfork band. And then the next area we would look at is the 786 into the point of control. Now, this is a very big area because that point of control is a year-long strong point of control. And we also can go ahead and turn on our naked daily and naked weekly points of controls, and we'll look at those. So we're going to go with weekly ones first. Yep, naked weekly point of control up here, right on top of the 786 at 144. So this is also going to be a naked weekly POC. Okay, and this is not the stills this week, so we're not going to mark that out. We'll go on to our daily chart. Now, there's other ones higher up, but we're not. I have those marked out. They're just hidden right now. Ooh, and a naked daily point of control in there too. So this is looking real nice up here as far as resistance goes. Naked weekly is at the top of the blue box, purple box of resistance. The naked daily is at the bottom of the purple box of resistance. And yeah, we just have some good levels down there for confluence. Now, this naked daily point of control below us, no, excuse me, never mind. It's not. It's today's naked daily point of control. So it has not confirmed yet. Let's see if we got, let's zoom out onto the daily chart. And let's see if there's any, nothing there. Let's go to the naked weeklies. I just want to see if there's a naked weekly. Okay, not down, not until $97, $98. Uh-oh, 97, which would be at the bottom of our pitchfork band. If we lose 100, we're coming for 97. We lose 97, we're probably coming for the bottom of the inside pitchfork around 87. I'm going to mark that one out right now because I have a feeling that if things get bad, that's where we're going. Let's see. Here we go. All right. That's it, guys, for Solana. Other than, so I would not be watching anything else on Solana until we break back above this 127 area. You can see here, let me now get rid of some of this stuff so you can see it better. On the daily, we did see a wick past our pitchfork midline, but overall our pitchfork midline is holding us really nicely. And we might see that push back up. You know what we could look at here too, as far as a big ABC correction, we could be looking at this here as a corrective A wave to the downside. This would be your B flat, where you took the highs of A, your B flat. So we would look for our ABC correction target zone. Wow. Okay. Let's see here. And we got to turn that log on. Yep. Okay, that obviously didn't work there because it's a B flat. So, of course, these targets are going to be much higher. If B wave was down here more, those would be down more. So, you can see that's where that flash crash wick ended, though. Okay, that's it for Solana. Let's go now to XRP. Now, you guys, I told you about this level yesterday. And I was looking to long this level, and I got this trade in here. So I'm in a trade on XRP right now that's up pretty big. This area here, we were looking for the SFP of these lows into, I forget what, into our ABC correction target. So we had our ABC correction target there, and we hit the target as well. So Bitcoin hit its ABC correction target. XRP hit its XRP correction target. Solana has not. Now, last time we talked about XRP, we were in this box of resistance, and I said this was a very, very strong support, not resistance. But look at, we came up to the top of that box and rejected from the channel midline. And so we did not get a winning trade from this box, even though it was super support. Value area low, naked daily point of control, naked weekly point of control, a daily channel midline, 786 SFP. We had so much levels in there, but it just didn't hold. So no matter how much confluence you have, sometimes the trades just don't play out, and you don't win them all. So that would have been a loser to me. I mean, you could have TP'd when you saw it rejecting. You could have closed out your trade when you saw it rejecting from the midline, and probably made enough profits to cover fees and have maybe a 1% gain on the account. But of course, I wasn't trading this, so I didn't lose or win anything on that. But that to me, overall, I'd say was a losing trade. So I'm going to delete that. I'm going to delete the daily. I'm going to delete this little guy here. Nope, not delete. Okay, there we go. And we did swing failure pattern into our ABC. This is where we were looking for. This is what we were looking at. So let's zoom out onto the 2-hour chart. And we can look at the same sort of structure. You guys, all these coins are having the same sort of structure. The Trump pump from the reserve, the 3-wave Trump pump, and then the ABC to the downside. We've been looking at this for over a week on many different coins. And let's go ahead and take our trend-based Fibonacci extension, the highs of A to the lows of A to the highs of B. Let me see which one is the highest. Here we go. And look at our 1-to-1 to our 1-2-3-6. Where do we go? In this area. Hit it. We had the SFP into that level. Now, I only put it to the 1-to-1, but technically I could have expanded this box all the way to the 1-2-3-6. And I said in my last video, I would take them as separate trades. I would take the SFP into the 1-to-1 as one trade. If that doesn't work, then I would look on a second box at the 180 level down here. And we got that. So I think my exact entry was 193.7. Let me check my phone on that. And I did wait until the SFP was, no, I must have been looking at a different exchange here. Let's see. 193.7. Yeah, that's it. Anyways, got the push up. Now, what we can look for here, we did hit that target, but once again, we're still not out of the woods yet on XRP either, because we still haven't even changed market structure. Let's go on the hourly chart here. On the hourly chart, we are seeing, if we really want to look at the most basic market structure, we have this guy here that we still have not even broke as far as market structure on the hourly chart. But really, in order to be comfortable, we need to break this guy up here at like 226. We do have the channel midline still that you can see right up here rejected us last night. This was last night, my time. I was sleeping, it rejected us. We got the move down today. So if we do come up to this area here, what we can look at is our fib pull from the highs of yesterday to the lows of today. Okay, 786 is close by there, but I don't like, 886 is right on it. Now, here's the thing. If we come up to that 886 and reject, we do increase the probabilities to finally break market structure, but excuse me. Someone asked me about the 886 a couple weeks ago, and they say, why do we, when we touch the 886, have a higher probability to come take out the low that the 886 was pulled from, or the high, vice versa. And that works in trending moves. So if you're in a trending move and say for example, we reject from here and we come down to our local 886 and bounce from our local 886, I'm just imagining that's the local 886, then we would have the increased probability to come take these lows down here, because you're still in a trend. And when you bounce from the 886, it severely decreases the probability of it being a wave 2 in a 1, 2, 3, 4, 5. It makes it a much higher probability that you're going to continue the trend to the downside, continue this trend to the downside. Now, on the other hand, this 886 pull is from this high to this low, and it's not continuing the trend, it's reversing the trend. So just because we hit this 886 actually does not mean that it gives us a greater probability to come take this high, because we're reversing the trend. So it still would be a good sign. Don't get me wrong. It would still be a good sign to come up there because you'd be breaking this local market structure here, but it does not work the same way as if you hit an 886 in a trending market. Then you would have a greater probability to take the lows. But 886 is in confluence with the channel midline of a very important descending channel that we've been trading in. It is up there at 221.9. I do think that's a level we could reject from. And if we zoom out here, gosh, I got something stuck in my throat here. If we zoom out here and we do a fixed range volume profile pull of just the lower price action from the flash crash sideways, this sideways range, we do have the value area low that's right around there. So value area low is a little bit higher. What would be nice to see is the swing failure pattern of that 226 high into the value area low around 227, 228. But that could also be a bearish signal, because if we do work our way up here over the next couple days in SFP and take the local liquidity of our last 4-hour high into our value area low and we start to drop, we could, come down to that 1236. So 221 to 226 to 228 is going to be a really important resistance. And then of course the midline at 221.9, those levels there. But we are technically, we did hit our target. We did grab the liquidity of our low finally, just like Bitcoin. This was equal to Bitcoin's 78.2 low or whatever that was. So grabbed it. We're seeing a little push up, nice little push up here. Already a winning trade. And now what I'm going to do is I'm going to go ahead and delete this box now because it's been used up. Our support's been used up. We've already hit the 1-to-1. We've already grabbed the liquidity. Gonna delete that. Now I'm not gonna delete this this area here because we still have not hit the 1-2-3-6. Now I am not gonna be looking for another trade at the 1-to-1. If we come back down here, there's a high likelihood we come to the 1.236 at $1.80 or $1.80.42 or whatever, 8042. All right, and then if we can make a bigger push up, we can do our Fibonacci pull of the entire C wave here, from the highs to the lows. And let me make sure. There we go. We're going to turn on our golden pocket. Okay, golden pocket. Now that we moved down a little bit, this purple box here a couple days ago was the golden pocket and the point of control, but now our golden pocket has shifted down a bit. So I don't really like how that happened there. I guess we're just going to have to extend this box a little bit, but what we can do, yeah, unfortunately, it is still close confluence. So I'm going to do that. Let's look at our 786 on that. Yeah, and the 786 is a bit above it. So I would say the GP, this box here is still valid. And then if we break that to the upside, what we can actually do is pull our Fibonacci targets from the highs of the ABC correction to the lows of the ABC correction. And first of all, I like this right away. This 786 at the value area high of that range. Let me pull this all the way too. There we go. 786 into value area high. Let's see what this was. Anchored VWAP, naked daily point of control. Golden pocket. Okay, so our anchored VWAP's lower now. Our golden pocket was the golden pocket pull from this high to this low, and we front ran it. Remember that? So what we're going to do is delete this box here, and we're going to make a new box up here between the 786 and the value area high. And this is going to be 786 / value area high, and then we're going to have to turn on those naked daily points of control to see if that's in there. We have a new naked weekly point of control up here. So that naked weekly point of control is where our smaller 786 is. Before I get off track, I'm going to look at that naked daily. Then we'll go back to that daily chart here. Ooh, I just saw how late it was too. All right, that naked daily, dang, it's down there. It's probably in confluence with our golden pocket. Let's look at our golden pocket. Yeah. All right. Unfortunately, there's a lot of levels we have to mark out on this chart because they are valid levels. And I know that you're saying, oh, you're putting a box every 30 cents. First of all, well, every 10, 20 cents. First of all, that's, if there's confluence there, you have to mark it out. Yes, it makes it more confusing on where we could actually reject, but you have to mark these things out if there's valid confluence. So this box here, we have an anchor VWAP from the all-time high. We have the golden pocket from the entire ABC correction, and we have our naked daily point of control there. So that is an important resistance. We have to mark that out. All right, then the next area we have to mark out. Let me turn this off. The next area wait, what was I just looking at here? Okay, yeah. This here, this naked daily point of control is pretty much in alignment with our much smaller resistance area. So that would be our first resistance area between like 221. Let's do this golden pocket pull, and it's the 786. So that's where we were looking anyways, at that 786 at 218. So our very first level of local resistance. Now I'm already right now going to go into my phone and I'm going to set a partial take profit there at 218, 217.5 to 218. Let's see, what's that at? 217.75 ish. So I'm going to set it at, yeah. Let's sure. Okay, close. I'm only going to do let's see, 15%. Because I think this could run 217.75. Here we go. Okay, got a partial TP set here. Now, once we hit that area, if we start to fall over and drop back down, we need to either look for a higher low in the making, like you'll look for your local golden pocket 786 retrace, or we're going to roll over and come down to this 1236 down here. But we did grab the liquidity into our 1-to-1, so I do think this could be the end. So that's why I'm only taking 15% profit here, because I think we can at least move up to our value area low at 227. Really 228. It's closer to 228. And I'm going to actually set another small TP right up there. This time, let's see, 227.5, I'm going to say. And I'm just going to do another 15% up there because I think we can run a lot more. Okay, and then now I'll let the rest run, and I probably won't even, well, I might take some profit up here. You got to scrape money from the market. So you can't expect every move to be the move, the trade that's going to win you, triple your account or whatever, all this stuff. You have to take profit at resistance levels because you don't know what's going to happen. So that's why I am setting limit TPs just in case. You set that limit TP. After that, you get stopped out. Well, still a win. If you take your first two TPs and you think it's going to run more, you can skip this TP, you can skip this TP and wait all the way for the value area high. I mean, that would be a good plan. And then, of course, up here's our big level. We have a weekly, a value area low, a 786, naked daily point of control, naked weekly point of control, the top of our big channel up here. And a swing failure pattern, which I did not mark into this box, but it's up there. Okay, that is about it for XRP. Now, I know I haven't looked at the daily levels. We should probably do that just to be good. Okay, we do have a daily level up here as well. So this is really key, this box up here. This daily here at 259.81. So I'm not going to put it on the chart. I'm just going to come into this box and I'm going to add a daily. So maybe that would be another TP area for me up there. Other than that, nothing until we get up to this daily, and I'm not going to worry about that till we get closer to it. And that's all that we've looked at for XRP. So now I'm going to go ahead and go on because I am getting late in time here, and I do want to go to bed. All right, so daily, our daily's marked out. We didn't even come up to that 0.5. We are breaking our bigger golden pocket, that 12.9 to 13.5 golden pocket. It's breaking to the downside. I'm going to delete that now. And our weekly is breaking to the downside. We can delete that now. Oh, unfortunately, Link, and I lost a trade on Link earlier today. I got stopped out. Let's go to the 4-hour chart. Now, Link doesn't quite have, I mean, you could look at this still as the same sort of structure. You have your 3-wave Trump pump correction, and then we had an A wave to the downside, but you see our B wave, we had what's called the B flat. So the flat wave, the B wave came up and took the liquidity of A and then just dumped us right back down. So flat waves are pretty common in crypto. You can see C flats, B flats, all those different, flat waves. But because of that, our 1-to-1 to our 1-2-3-6 is going to be very close by. So let's do our trend-based Fibonacci extinction from high to low to high. And yes, okay, we are hitting, but here's the scary part. We've kind of even wicked past our 1-2-3-6. So it is just a wick, but I don't like that very much. Oof, 1, 2, 3, 4, 5. I mean, we can see a clear 5-wave impulse down here. So if we come onto the hourly chart, we can look here. We've got our wave 1, 2, 3, 4, 5 here. So we've got our 5-wave impulse. Doesn't look the prettiest, and I do not like how our 2-wave came so high to our highs. It didn't take them, but it came high there. Yeah. Yeah, because this was the high up here. Okay, so we did have a 5-wave impulse. It could be completed. We could be completing right at the 1-2-3-6 and make a move, a reversal here. But let's go ahead and look at our local targets here. So first of all, right away, this high up here of our wave 4, our wave 4 highs into the bearish backtest of our big descending channel that we're losing, 14,569. Between 14,569 and like 14,68. That is our first level of resistance there. I would say a big level. Now, of course, very locally, just like with all these coins, we have local market structure break right around 13 for us here. But I'm not going to be paying too much. If we can't even break that, then we're going to come probably down to $10, to be honest. Down in this area. But okay, so now let's go ahead and delete this. We saw that we hit our ABC corrective targets. We can do our Fibonacci pull from the highs of wave C to the lows of wave C. And let's turn on first our golden pocket. Okay. We can do a volume profile pull of this sideways kind of range that we were seeing here. And actually what we could do is we could even just pull it to right here where we rejected that range and finally lost the value area low. So yeah, our point of control is right at these highs here between 14.7 and 14,569 is our first resistance. And then I would say our next resistance is not actually the golden pocket, but it's going to be the 786 near the value area high at 16.4. But let's go ahead and check our naked daily points of control here. Ooh, okay, we probably do have in that golden pocket. Let's go to the golden pocket. Yeah, okay, so we do actually got to mark that out. Our golden pocket has a naked daily point of control in it. And so we will mark that out. Golden pocket, naked daily point of control. And that is between 15.47 and 15.618 or 626 really. So that's our first resistance is this area here. And I'm not going to pay attention to this gold naked daily here. Yes, it's there, but if we can't even make it up to this area, then we're probably, I mean, you could just come up here and roll down. So be aware that that's probably our local 4-hour 786 pull. So if we do a Fibonacci from those last highs, the rejection from last night down to our lows today, 786, yeah, it's right there. So 786 golden pocket, that's the first one at like 13,985 to like 14.1. But that's a small resistance. Yes, it is a resistance though, so we could reject there. But what I'm really concerned with is, let me go ahead and turn that off now. What I'm really concerned with is this area here where our bigger point of control is and our SFP into the bearish back test of the channel. So bearish back test of the channel, bearish BT channel. I mean, that means back test. And then we have our point of control there and then SFP there. That's between 14,568 and 14,773. Okay, that is pretty much all I'm looking for. If we break down and make new lows, we're probably going to grind our way down to $10. There's not much else down here for us to look at. Yes, we'll probably see a bounce at 11 or 12 or something like that, but there's honestly not much here. Smooth move up in this area means a smooth move down in that area. I mean, the point of control of that range. That's what I'd be looking at. The point of control of like this consolidation range at 1060, 1061. We're at in the value area high. I guess you could SFP the lows that we just created today into this value area high at 1164, but I'm not even going to look at that yet. I think if we break that 1, 2, 3, 6 that we bounced from today, then we're probably going to come down to 10 with small bounces in those two spots that I just showed you. Okay, that is it for Link. I'm going to get going, guys. I know that I didn't do ADA today, and I'm sorry about that, Roman. I know you like me to cover ADA, but it's getting late here, man, and I still got some things to do before bedtime. So thank you guys for all supporting. If you got anything out of this video, please like the video. Please subscribe if you feel like you got get some value out of this channel. I hope to bring you guys good targets and good teaching and learnings every single day. Thank you for your support. So have a good one, and I'll see you guys tomorrow.